what we're seeing in the current student accommodation market from an investor's perspective, from an occupier's perspective, how are things looking at the moment in the sort of general landscape?
I think from an investment perspective, we're seeing a few things. We're seeing a real flight to value add opportunities. And I think the people that are originally in the core plus market are on pause for the time being. And I think a lot more of our clients are looking for those value add opportunities where not just from a yield perspective, but also from a rental tone perspective in terms of, or from a development perspective, is there something they can add on to increase their capital values moving forward? I think that is the sort of trend we are seeing at the moment. There's no point hiding the fact that what we've gone through and the way the debt market is and the effect, the impact the mini budget had on PBSA is not immune. I don't think any sector is immune. But PBSA is in a stronger position, I believe, to ride this out and actually come out the other side of it in a more positive environment than we were going into that.
The fundamentals are still pretty strong, aren't they, in student accommodation? I think, one of the things we've certainly seen this year has really proved that in terms of just the higher levels of demand that we've seen. And I think if you look at some of the stats from across the operators, a lot of rooms have let up a lot earlier than I think they ever have, which really shows the kind of robustness of that demand. And Lee, I guess, where do you see that kind of being driven from? We were talking about the domestic market, the international market. How are things sort of being played out across that?
Yeah, I think it's hard to ignore the overseas market, and when we're talking about that, we're specifically talking about Chinese students. Last couple of years has seen over 100,000 students from China coming in, first-year students every year. That growth is forecast to go through the roof. If we look at sort of middle-class Chinese families, or in our sense, middle class, which is over $200,000 we're looking at kind of 2.93 million more households in that bracket in China by 2040.
And I guess it's also being driven from that trend is being driven from other countries as well. So whether it's the Indias of this world, Western Africa, driving that kind of demand into the internationalisation. And it's probably fair to say that the Chinese market is back post-COVID. The international market, the student market is back from what we can see this year. And if there is a kind of rump to come through, then it's only going to make demand even stronger going into next year.
I think the UK fundamentally at the moment, from a holistic perspective, around not just the actual accommodation cost, but in terms of tuition fee basis in comparison to the US, Australia, for example, where traditionally these international students would also look at for study, we're actually looking quite attractive given the current environment we're in. And I think that's only set to continue for the foreseeable future anyway, around people actually building in that holistic package of the cost of education, not just what it is costing them per week, per bed to stay in accommodation.
There's also a currency issue there as well. The Chinese currency has strengthened quite considerably in the last sort of 7, 8, 9 years. It's relatively cheaper, whereas investment in bricks and mortar is relative. Your return is relative. Actually, if you're investing in your child's disposable kind of money going in, that's a lot cheaper.
I guess a lot of the universities are focused on numbers. Really, one of the things we looked at is that student fees haven't gone up for probably approaching 10 years, and but costs have definitely gone up at universities, and it's been eroding any kind of margin or profit that they would be making. So it's really, I think across a lot of universities, it's a numbers game. In terms of getting more numbers through. And now we've seen student caps been removed as well by the government a few years ago. So ultimately, these students need somewhere to stay. So that's putting even more pressure on the current market, which is still quite diverse. I mean, it'd be interesting to understand, Lee, about what you were seeing in the PRS market in these towns as well, and some of the things that are happening in the HMO market, which spreads across student, but also young professionals, young families, and other renters as well.
Yeah, I think you've got a real squeeze on beds. You've got a fairly substantial net outflow of private landlords in the UK at the minute since the 3% surcharge in stamp duty for second home ownership. You've had a net outflow averaging around sort of 70, 80,000 units in England from the PRS, and that puts pressure not only on PRS rents but obviously on that wider student market as well, because a lot of those students will be in essentially what is the PRS market, a PRS property. So that coupled with the subsequent rapid increase in rents in that market, shortens that gap, and all of a sudden PBSA starts looking attractive, I think.
So, George, geographically, where do we see growth in the student sector, and how should our clients be looking at getting into the sector?
I think personally, you've got to look at the dual university cities, and I think that's the geographics of that are quite varied. And I think once you pick an area in terms of where you want to invest, you've got to look at the fundamentals and what's driving the demand supply there. For example, a market which I think has actually had a significant resurgence in particularly the last 6 months. Southampton, for example, you look at that as a dual university city, and historically was struggling from a university perspective. It's had a real good turnaround post-coronavirus, and actually the investment into the university, the facilities, has had a knock-on impact to investor demand. At the moment, there's only 400 or 500 beds there in the pipeline. So from an investor perspective, if you can get good sites and good locations, I think that would be a sort of example of a geographical city which you could look to invest in and gain some value from that. Yeah.
And I guess the part of when we're looking at the demand and supply dynamics of cities is also looking at the robustness of the universities. I know we often look towards Russell Group towns and cities, and there's probably good reason for that. I think the investment that they're making into the facilities to really drive more student numbers through. What are the kind of insights you've seen in that space?
Yeah, we've just done a great bit of research where we've looked at the expansion plans of the Russell Group universities, and we've got that down conservatively at about £20 billion within the next 10 years. There's some sort of standouts from that. University of Manchester, being a big one, another being University of Oxford, usual suspects in that sense, I suppose. But they've got significant plans to expand their footprint, and obviously with that, student numbers.
Yeah, and part of the offer, I guess, for domestic students and international students is the guarantee of accommodation. I think we've seen in the press this year quite a lot of students not being able to get their first choice or even probably their last choice in accommodation and being ferried across from different cities. So that's putting even more pressure, I guess, onto the accommodation providers, because if they're investing in the facilities, they also need to be investing into the accommodation. And I guess that's probably where the reliance on the private sector and purpose-built student accommodation, as we kind of know it, is going to come in, whether that's domestic or international students. Yeah. So I think one of the things we've certainly seen over the last few years is quite a healthy pipeline of new accommodation coming into the market, but starting to see that drop off a little bit. And I think there's a kind of COVID lag there, where there's the supply of new accommodation that's going through the planning pipeline has been somewhat kind of detracted from during COVID. What other challenges are we sort of seeing in terms of new supply coming forward in the various markets?
I think here and now we're seeing construction costs being a huge factor within development at the moment, and actually how that is impacting people's bottom lines effectively from an investment perspective. You want to know if you can get a fixed price contract, for example. In this current market, that is attractive. Whereas if you have construction costs that could change almost on a weekly basis, linked to inflation or other things that could impact that outside of your control, that's going to make the development, and that's where the profit on cost and the profit at the end is going to get squeezed. I think from an investment perspective, if you can get some clarity on that, great. At the moment, there is a little bit of uncertainty around build cost inflation. We are starting to see that tail off a little bit, but actually, it has been a period of discovery for both investors and developers in the last 6 to 9 months around getting those costs right, because that is impacting things directly. The other thing we're seeing is actually land size becoming increasingly competitive, not just from the PBSA perspective. You're looking at it across the bed sector, for example, industrial as well. All these types of people are often looking at similar sites, and it's becoming a really competitive area. At the moment, that is a bit less given the environment that we're in, but particularly pre-September, land was becoming super competitive, and at the moment we haven't seen a tail off or a readjustment in pricing. Land has just grown and grown and grown in terms of the value, and actually I think to move forward and progress, we will need to see that tail off a little bit to make development more viable.